blocking it. I mean, when you own 30% of the treasury market, it's hard to get interest rates to go up. So the Fed, and I always take the inflation signal through the 10-year treasury as an important signal because it tells you that the economy and the markets are working together. The one thing that I will say to you that it troubles me is this. We have put so much money into the system from the federal government as well as the monetary. We don't have the policy defenses if things go bad. Okay, remember when the tech bubble burst and the housing market burst, funds rate were at 5-6%. Funds rate is zero tells you you have little room to provide a cushion to the economy. So again, this cycle is going to go on because central banks around the world are pumping it up. But you never started a cycle with peak market valuations. So to me, equities are way overvalued relative to profits and economic activity. So I would take something off the table there. And again, you can't really find a home in fixed income. There's no return. So you got to go into real assets. Housing, to me, it's more of a local story than a national story. There's definitely markets there that are overheated, and you got to be careful. I'm sure that some of this will spill over to the rental market and lift those over time. But it's really a unique cycle, and again, I don't have all the answers to that right now.
Joe, just as a side point, we had Paul Stevens speak from Robertson Stevens, and he's a guy out of Tiburon in California. It was probably in 2010, and his comment was that the Fed was out of control and that they were just printing money, and so therefore he was buying real assets. So his idea was to try to corner the walnut farm market in California. And then he said, I've also invested in something called a Bitcoin mining company for his two kids, Bart and Brad, who went to Princeton. And so if anybody knows, Bart and Brad Stevens have made a fortune on Bitcoin because they were mining it at $10. So it's always interesting. There's always opportunities there in the, alternative assets, real asset, positions. And so, we're always looking for tidbits of advice on where to go next. So if you're saying real assets, so my thought was that it seemed like farmland was a little bit overpriced to me, or, it goes through these cycles of being overpriced. So, to me, it's kind of a riddle of where to buy. And yet, even if you look at real estate, real assets, there's a lot of guys who are distressed right now as well. So,
yeah,
it seems like there's like an asset, like if.
Yeah, you're right. The first off, I'm really puzzled by cryptocurrency in the sense I see. If I told you not to invest in it, I would look like a fool, like I am. But for me, for something like this to really gain traction and be important, people eventually have to get paid to use it. They have to have their income be in there to make it transactionable. And I don't see that happening anytime soon. And I think eventually when the regulatory changes take place in this market, you're going to see a reappraisal of what it means. But again, I just think easy money creates all these different financial toys, which I call them financial toys, to gain traction. And financial toys without any underlying value crash hard.
Sure, and I know we're going to have a real estate panel later today, and they're going to discuss housing. So do you see any triggers there's all these multifamily owners who they haven't been paying their mortgages because nobody's been paying their rent. Do you see any triggers in that marketplace that could happen? I guess California just announced they're going to bail out multifamily owners because people haven't been paying their rent. So any more thoughts on that?
Well, yeah, I think once a lot of people get back to work, they're going to start making many of those payments that they're in arrears on. But I think a lot of these states, New York, Texas, California, and Florida, that get this huge sums of money from the federal government, are going to use some of that money to help homeowners pay off some of their outstanding debts. I mean, that's an interesting thing because people don't realize in the past, when you had a recession, you usually had a lot of strains on liquidity, household liquidity and corporate profits, right? Now you have enormous amount of liquidity and government's going to bail you out. You can't keep bailing everyone out without some type of price hitting the economy. So let's say we get 6% growth this year, which is very likely, and maybe 4% growth next year. How can the Fed keep zero interest rates? It's not just the policy of promoting asset purchases and low interest rates. It's the promise that's out there of no rate increases to 2023. That just opens up Pandora's box, and you take all kind of risks. So that's what's happening out there. The Fed has made the markets more of a casino.
Interesting, Joe. Well, listen, we have to move on to the next set of speakers, but great and very insightful. And, I guess we're all looking forward to the next 12 months of some trepidation. So thanks so much.
Take care. Thanks.
So our next speaker is going to be Laura Flanagan, and it's very interesting. So we're talking these days about getting a double. You have to turn off your volume. You're mute yourself. So we just had an emerging manager panel where we're talking about how emerging managers sometimes are too small, somebody with a Bloomberg terminal, et cetera. Yet we see more and more people, outsourcing operational aspects of their funds or their, if they're an RIA, their businesses, et cetera. And there's a huge rationale for that, which is that, I guess it's been kind of the prevailing wisdom for the last 5 or so many years, that it's better to focus on your core competency and do what you do best, and then, find the people who can help you become more institutional from an outsourced point of view. So Laura Flanagan represents a outsourced fund compliance company. I think it's really great. We'll have an outsourced benefits company presenting later for about 5 minutes or so. We just find that this is becoming a more and more mature market, and funds should be looking at this in terms of looking to get other resources as they build up, bulk up, et cetera. So Laura, why don't you introduce yourself? I'm going to get out of the way, and I think your partner's going to be speaking as well.
Yes.
Yeah, great.
Thanks. Hello. Thanks, Marty. I am Laura Flanagan. I'm the founder and principal of a company called 3ICO, which outsources compliance professionals and services. I'm also and affiliated with a law firm. I'm of counsel to Becker and Polyakov, and this is a partner of mine, Robert Rabinowitz, and we work in tandem, both at the law firm as well as in the compliance company. So just to begin with, there are a lot of tidbits that we had heard earlier that are really touch points for what we do at 3ICO and what we've seen as you said, a maturing market, an opportunity. I'm a lawyer by trade, and I got into this industry by accident, which I guess is a happy accident. And it came through compliance because I was working as a general counsel for an investment advisory firm. And we had, and it was an emerging firm, and we had our first SEC audit, and it was a disaster. Not that anything was going wrong per se, but that it wasn't being done in the way that the SEC wanted it done, which was very frustrating, because when you're doing things right and you're honest and you're a good manager, yet you didn't check the boxes or file things properly or note that something was noted and done, it becomes a problem. So I started this company several years ago in order to address the problem for smaller RIAs and funds, because they are looking at obviously growing their assets rather than compliance, which everybody hates. So we're going to try to be happy, funny, and wonderful here to show you that there's a reason why at certain stages in a fund's life or an RIA's life, yes, you should be focused on growing your assets and doing well in your performance. And it's probably wiser, as it would be, to hire, counsel in situations instead of practicing as your own attorney, where their focus is entirely on compliance and doing what the SEC needs, looking at your clients first, protecting your assets and your investors. So that's what we do. And, whether it's an RIA or a fund or we come in, we assess your current compliance as needed. We upgrade if needed. We run it, we test it, and going forward, make any changes, regulatory changes that come down, and allows the fund managers to focus on what they're supposed to be doing. And over the years, since I started this company, I've worked with many compliance consultants for my own firm as well as for firms that I'm working with. And I have found that one of the distinguishing differences is that, and they're fabulous, they're great ones out there, really great, that we rely on as well for, best practices and updates and all this kind of stuff that we can't necessarily keep our eye on while we're working with a particular firm. Nobody is really getting in. There's a lot of calling in. There's a lot of do this, here's some emails, here's a calendar thing, here's this, here's that. But nobody's really integrating into the companies that they're working with, understanding the business, understanding the advisors or the managers and the clients and the investors. And what we try to do to make that a little bit different is we work with fewer companies and we integrate fully into the firm. So we are there, although many emerging RIAs or funds don't necessarily need a full-time compliance department or a full-time compliance professional in there. We function as that for you, even if it's not in hours. So we actually put a person in there as your CCO to run the program and integrate in whatever ways is necessary for due diligence and any other needs.
Well, I think it's also important to mention to the audience that even if you're not a formally registered firm and you are about to become registered, or you may not ever need to be registered because you fall under one or multiple exemptions, your investors expect you to have a compliance protocol in place. Even though the SEC may not come knocking on your door, when investors are looking to place their funds somewhere, they want to make certain that you have compliance protocols in place. As I say, you don't necessarily need it legally necessarily, but there's always compliance protocols that need to be put into place that investors want to see, and that's also something I know we do very, very well, even with funds that aren't necessarily registered yet. There are funds that are on the cusp of becoming required to get registered, either because they're going to lose their exemptions, they've got too many clients, or just the changing regulatory environment. The SEC is always overreaching, trying to get involved with more and more activities, oversight activities in the markets. And so exemptions change and morph all the time. And so if you have an infrastructure, and we had some of the panels earlier speaking about infrastructure, and the investors want to see that you have an infrastructure in place, not only to run the money, but to do all the tangential things that you need to do to run a proper family office or fund. And compliance is certainly one of them that people want to see. And on top of that, because you're associated with the law firm, we have the legal aspects covered as well. And it's not like having a lawyer sitting in your shop every day, but we're there as a resource to be able to answer questions that come up in routine day-to-day activities.
And I think one of the interesting parts too of our company is that it was started by lawyers. And as I always tell my clients, I can't stop being a lawyer even if I want to. So while I'm sitting there talking to you about compliance or whatever issue might come up, I'm already acting in the capacity of how do I, what are we actually looking at? Are there legal issues that are coming up? And if so, how do we allocate resources to those issues? Are they going to be a problem? Do we need to, put our eyes out further. And what's lovely being affiliated with a law firm, of course, is that I have the resources I need as I need them, even if it's not an area of practice that I have experience with.
Right.
So
So can you talk about ideal sizes of companies that you work with? Are they tiny? Are they mid-sized?
Sure.
And what rationale they have for you working with you?
yeah,
You know, is there an opportunity for one to work with you in particular versus another?
absolutely. And obviously, one size does not fit all. So certainly, we can provide compliance services for an emerging firm. I think one of the smallest firms that we work with now has probably 50 million under management and up to $1 billion under management. And really, it depends on the type of business, the complexity of business, the number of managers working. But we can tailor the services we provide to the needs of the company. So if it's a smaller firm with just emerging, starting to get their infrastructure together, we can put together protocols for them, best practices, even as Rob said, even if they're not required yet by the SEC, put those things in place, because obviously everybody's working towards size and scale, right? And so we want to be able to scale that with you, to the point where if you're large and approaching the $1 billion mark, perhaps we can give you someone that really is full-time and really outsource that person to you, where you have a full-time CCO, all yours, not focused on any other business. So we're really looking at that first run, that company that's growing from the 50 to the billion and in there. And I know that seems like a large range, but that it seems to grow exponentially after a certain point, I find.
So you know, especially, I mean, it sounds like you're really a big part of due diligence ready,
Huge.
right?
Yes.
So, and you work with all types of alternative funds or RIAs, or does it matter any in particular, any subject matter?
No, it's really, I mean, unfortunately, a lot of the regulatory and legal landscape is a bit one size fits all, which is unfortunate because, you know, Deutsche Bank is getting the same requirements as little RIA that has 200 million under management. And, you know, not the same resources can be allocated by the two companies. So we tailor to the needs. And because, you know, I heard somebody talking about emerging managers and the nimbleness of smaller companies, and that is a fact. And I kind of like that, having been in the corporate world and then been sort of entrepreneurial in my own right. I like being able to be nimble and to customize and tailor whatever the needs are.
What drives the regulatory requirement? So, I mean, you're a vanilla, fund, and you've got one strategy. Is there a multi-strategy? You have more requirements you have to fulfill, or is it capacity driven? You're larger, therefore, you know, or volume of trade. You know, what are the, you know, the parameters of, you know, more strategy, you've got more trading, you're gonna need more
diligence, really, I think.
And testing.
Yeah.
And testing the various strategies and making sure that they're actually doing what they say to the investors that they're doing, because at some point, you know, investors want responses. As some of the earlier speakers said, it's not just about returns. You want to make sure your processes are proper. You want to make certain that they can continue to fulfill, you know, whatever the requirements are of the investors. Really, that's what it is. And so part of the compliance aspect is to go in and test those processes to make sure that they're functioning, to make sure that there's controls and procedures in place, to make sure that if you lose one employee, for example, because you have a disgruntled employee or somebody's just not working out, that you cannot lose any of your momentum as an organization. And so we go in and we test those aspects of the organization as well.
Right. I was really asking, do you guys charge on an hourly basis, or do you have a package fee afterwards?
We do.
The answer is yes.
So generally, when we're working with firms, we assess the size and the business model and what the investment number of managers, and come up with basically a retainer, and it's a monthly fee. But then, of course, if there are, you know, legal aspects or situations that arise, that might be a separate fee. But of course, that would be discussed, obviously, prior to that. And
Yeah,
That's
on the
it.
legal side, again, the lawyers, which is what I am with this organization, we sit in the back and respond to requests for, information, for consultation on a routine basis, because sometimes it's very hard, there's not a bright line between legal and compliance in this area. A lot of compliance issues dip into the legal entities and vice versa. But what we're equipped to do also is, if there becomes a significant legal issue, a regulatory investigation, a lawsuit, an investor lawsuit, something to that effect, then we would switch gears and do it more as a traditional law firm, where we'd be retained for that purpose. But we've already got the background information as being tied in with the 3 ICO compliance program.
So, one of the hallmarks of being an attorney is being able to, argue both sides. Do you do compliance? There's a lot of family offices who do direct investing, or they invest as LPs, obviously. Do you do that side as well? Do you work with family offices who are, looking at investing? Do you make sure that potential, that they're investing in are
Sure.
as well?
Yeah.
On the legal side, yes.
Okay.
Yeah.
But from your side, from the compliance point of view, you're not saying,
From the compliance point of view, we're really working with the outward-facing diligence. So we would prepare the fund for any kind of diligence request that they would get from a direct investment, let's say. So we could, we obviously working with law firms, so we can field what those things would be and, be prepared best practices for the fund going out there. And then on the other side of it, of course, then there would be whatever legal component the family office needs in order to directly invest, whether it's setting up structures or whatever.
Yeah, even for an unregistered family office, without a legal requirement to have a chief compliance officer or even a compliance program, from a best practice standpoint, you want to be able to show you have somebody to answer to. You have a board. You have the heads of the families that you have to report to, and you need to provide them with information, and they want to see that you're engaged in best practices, is that you are following a protocol that all other firms that are registered follow. So although, again, it's not legally required, from a best practice standpoint, you should have an internal compliance program that you can demonstrate is functioning. We have a question now.
Is it acceptable or?
Truthfully, we've never done that. I mean, I know that people do that. The problem with doing so, I think, from my personal perspective, is you lose some of your objectivity as an attorney and as a compliance person. You come in there looking for certain things and looking to provide, certain analyses for your client's benefit.
And independence.
And independence, exactly. So once you're a shareholder, once you're a stakeholder in that, you've got a conflict. You've got a built-in conflict that potentially could skew the advice that you may otherwise be providing.
But surely you have a stakeholder you're in.
In certain cases, I would agree with that. There may be other cases where it's not. And I'm not coming up with any examples right now, but, you have different classes of ownership, for example, where there's different stakeholders. There could be founders that are paid out at one level and more recent stakeholders that paid out at a different level. You just don't know. And again, I'm not suggesting that there's no situation where that wouldn't be a good idea. I'm just thinking as a general practice, I like to approach the situation with more objectivity and more independence.
I think is part of the value that we saw initially. Again, the idea of an outsourced anything, to me, devalues the independence factor in it. And from a compliance perspective, I think independence is probably the most important thing you can bring to the table, because you're not influenced.
The analogy is you'd rather be the auditor than the chief.
Absolutely. But the difference, which I think is really important, is because we're integrated into the firm, that's where the alignment is. I always say to my clients, I don't work for the SEC. I work for you. I want to protect this firm and your clients. And so, no, I'm not the police. Let's make it work. Let's make it work out properly, though. But the independence factor, I think, is really important, because my interests are only and always on compliance and legal.
Let me bring up one other aspect about that. We do a lot of work with registered investment advisors, both legal and compliance. I've done enforcement work with the SEC for many years. And typically what happens, if you have a regulatory proceeding with the SEC, you can either get fined or suspended or there's various sanctions that the commission will impose to resolve a matter. But typically one of the things that they require is the implementation of an outside consultant to come in and review the processes and procedures of the firm. Now, I'm not suggesting that that wouldn't happen with an outside consultant, but I will tell you that I believe it would be less likely to happen, because what they're concerned about, the SEC, is that you have, as Laura was pointing out, the independence of someone coming in and looking at your models and your processes from afar, instead of being, under the covers with it as a typical in-house CCO would be.
Do you work on all venture capital firms? I know they have different compliance regulations, and we have a huge audience in California who is venture capital oriented. I mean, there's an explosion in venture capital managers in general.
Yes. Well, my firm does venture capital work in terms of the documents, the formation documents, so we can certainly accommodate that from a legal perspective as well.
Yeah, but the compliance is not as important.
Not quite to the same level, not yet.
So you were talking about working with $50 million to $1 billion. Does capacity matter? Like, at what point does somebody say, like, they've gone in-house with an attorney and maybe it's not working out? So do you guys step in on that as well, or?
How do you mean? Like,
you might be a certain size, maybe you're larger than $1 billion.
It doesn't, the number is not really the issue. It's really more the number of advisors, the flow of trading, how much supervision is really going to take place. Because you could have 2 advisors who are working with, $2 billion, and that could be a perfectly manageable situation. So it really has to be assessed on a case-by-case basis, whether or not it's a fit, and whether or not you need somebody really full-time on the ground. You know what I mean? And again, if that were the case, we could potentially supply that as well, where it's an exclusive retainer with one CCO position for that particular firm.
Any circumstance where a firm might move from having somebody to outsourcing it?
You mean going from, okay, so you're going the other direction, right?
Well, there's overhead expenses, obviously. That person, the in-house is, they're on salaries.
Jobs and they need somebody to step in.
Yeah. Absolutely, and it could be interim as well.
Sure.
Absolutely.
Sure.
And what's actually kind of nice about an interim basis is that you then have somebody come in with a completely fresh eye, review the entire program and upgrade, change, test, and take it to the next place, which could turn into a permanent situation or could assist in finding the next permanent situation as well, because we could be used in that capacity to vet potential CCOs for a permanent position.
Great. We have to move on to the next panel, but listen, you guys have done a great job.
Thanks
so much.
Thanks very much, everyone.
Thank